Whenever people ask me, what do you need to do your job as a fixed income advisor? I say Bloomberg is like my right hand. How has Bloomberg over the years managed to maintain this dominance?
First of all, Mike Bloomberg is a genius and he's got an incredible sense for the product.
You open Bloomberg the first time, like everyone tells you about Bloomberg and you're like, what is this? The UI is like shocking.
It's very utilitarian. You'd strip all that out because you wanted to load the page fast because people wanted the pure information.
What's the future of media and finance?
We are in a completely new era where I can go out and write online and get 100,000 views and get my story out there. I mean, this is like unprecedented.
Being a charter holder has helped you in your career, in all honesty, because it's a lot of work.
I think the CFA has evolved into a marker for anyone in finance.
What is one lesson that you've learned along all these years from working in the industry that you wish you had learned earlier?
It's a big question. I mean, I think that
this is The Blonde Dollar with Ignacio Ramirez. Hello everyone and welcome to this new episode of The Blonde Dollar. I'm thrilled to have Ted Merz joining us today. Ted has spent 32 years at Bloomberg, so he's a true legend in the world of financial news and innovation. He spent nearly a decade as Bloomberg's global head of news product, where he led initiatives that shape how millions of professionals consume financial information every day. Before that, he spent 16 years in senior roles at Bloomberg News, including as New York Bureau's chief and managing director for the Americas. Ted's work during this time has been pivotal. He oversaw coverage during major events like 9/11, and he helped expand Bloomberg's operations across Latin America. And what I think makes Ted's career especially fascinating is how he bridged the gap between journalism and technology. He was instrumental in integrating Twitter into the Bloomberg terminal and led teams that worked on AI-driven tools like automated news sentiment and data analytics. And since leaving Bloomberg in 2022, he founded Principles Media, a ghostwriting agency for executives. And now he advises startups and financial firms on content strategy, fintech innovation, and even a little bit of angel investing. On top of that, Ted is passionate about mentorship and loves working with people interested in journalism, content, and fintech. Ted, welcome to the show. I'm so excited to dive into your incredible journey.
It's great to be here. Thank you for having me.
That's quite a long introduction. Sorry about that, but you have a very interesting background. So I wanted to make sure everything was in there. So, of course, today we're going to be spending a lot of time talking about Bloomberg. I can't think of anyone else in my network that has spent over 3 decades working in the company. So I guess that everyone listening to this show is pretty familiar with what Bloomberg is. But before we dig in, maybe could you say in a couple of words, what is Bloomberg?
It's a good question because people know the name. A lot of people know the name because Mike Bloomberg ran and was the mayor of New York City for 12 years. But Bloomberg is basically the information highway for financial professionals. It is a system that all the central banks, major brokerages, trading houses use to evaluate securities and to make purchases. Mike Bloomberg founded it in the early 1980s. And it started essentially as like an online calculator, specifically for bonds. So if you go back in history, what's interesting is that a bond trader, if I were trading bonds, I were a buyer and you were a seller, I would call you and you would take out a big book and look up at the descriptions of the bonds. And then you take out a manual calculator and try to plug in the numbers. So Bloomberg put that all online. So it made it much easier to find securities, to know what you were trading, to type in prices and get yields. And then also, very crucially, to track the performance over time. So it stored the prices and you could graph them over time. And so that was kind of the beginning. And from there, it went into equities, commodities, fixed income, all kinds of other securities. And it's really become the indispensable tool for any financial professional.
Yeah, I think we cannot emphasize this enough, but whenever people ask me, what do you need to do your job as a fixed income advisor? I say Bloomberg is like my right hand. and Excel. Those are the two things. You give me those two and I'm happy. I can do my job. But yeah, it's clearly defined how the whole financial industry operates today. And we're gonna dive deeper into that later on. But before that, I wanted to ask you about Mike Bloomberg, because I guess very few people have had the opportunity to work as closely as you did to him for so many years. So can you share maybe a memorable story that you had with him?
I think what's interesting about Mike, and so I wouldn't say I worked closely with him all the time. What I'd say is that what's interesting about Mike Bloomberg is that he was a securities trader, but he was an engineer by training, by education. And so he's always thinking about the product. He's always using the product. He's always trying to make it better. That's kind of his technical style. And then his managerial style was that when he would open the Bloomberg every day and start to use it, he might find problems and things he didn't understand or didn't think worked. And so I was in charge of the news applications on the professional system for a number of years. And this was after he was married, but when he came back and he used something, if it was a news application, he might message me or call me. And I think that's very interesting kind of management leadership story, because he would jump a number of, I was not like a direct report or anything like that. I had a number of layers, but he tended to go right to the person who might be able to answer the question and he could work with. So he might send you a message and say, I'm looking at the screen and I don't understand why it is the way it is. Can you come over and show this to me? And I think that's probably very unusual for executives and CEOs. I think it's unusual. People tend to follow the chain of command. And Mike would kind of skip over those layers and just call directly either the salesperson or the product person who might be able to answer the question he had, and then work with him on a solution. So I think that's kind of very notable about just the way he manages. I can remember lots of stories where he would type something in, it gave him a different result than he thought. He would either call or message, you'd go over to his desk, he would show you what he's working on, and there'd be a quick conversation, and he'd say, is this the way this should work? And if you said, no, like it doesn't make any sense, he'd say, okay. He'd say, I want you to fix that. But the way he went about it was interesting. He would take out a yellow sticky and he would write down on the sticky and say, okay, Ted Merz to fix this thing, and he'd put it on his desk and he'd say, call me when it's fixed, which is incredible, because I think what it shows is, one, his involvement directly in the product. It shows the way he's communicating with a sort of frontline manager. And then also there's a level of accountability. He's like, come back to me when it's fixed and tell me it got done. And when you put all those things together, it's quite an effective way to manage, So I think that's one of the things that struck me about
very hands-on, very approachable. Then that I think that's definitely very interesting. I also very much like managers that are like that. And I guess he consumed a lot of stickies during those years. So, I mean, after working 3 decades in Bloomberg, you saw the evolution of tech, media, and markets and how they got more and more intertwined with each other. So what are your lessons from those years at Bloomberg, seeing those three forces collide and merge with each other? And what do you think the future will hold when it comes to those three verticals?
It's a really good question. It's, sometimes it's worth just taking a second and remembering how much has changed in the last 30 years. I started at Bloomberg. There was not really the internet. We didn't have the internet. Bloomberg was a closed system that ran on an intranet directly to customers. They had cables directly to customers. So we were not working on the internet. And information was not widely available in the same way. And one of the stories I like to tell is my first job at Bloomberg was to summarize newspapers and articles in newspapers. And the way, this is 1990, so it maybe not that long ago, but it's incredible the way we went about it. Newspapers at that day would come in and get distributed to a newsstand, where at 7:00, the newsstand would open and you could go buy them. So what we decided and we figured out how to do is to go to a wholesaler and buy the newspapers at 4 a.m. And we would take those copies of the New York Times and the Wall Street Journal and we'd look at for major stories that they had broken. And we would write short summaries that we published on Bloomberg. And so this was essentially putting on the wire for traders in London and Europe and elsewhere, stories that were going to be breaking news, but which had not appeared anywhere yet. They obviously were not on the internet because that didn't exist. You could not get them at the newsstand. And so people could trade off this. And I think one of the things to think about with financial markets is this has always been the case. This has been the case for hundreds of years where people tried to get an informational advantage. If you go back to like the Crimean War, they used pigeons to deliver battlefield news to London to trade off of. And over the next number of years, the information just got faster as it got digital and online. And sort of we ended up with like the high frequency trading days where information was in milliseconds instead of hours or days. But I mean, I think there's been an evolution. The main thing I'd say is there's been an evolution where the time gap has gotten smaller and smaller, but people are always looking for an informational edge. Where can we find new information that is not in the marketplace? And how can we make that accessible? From a media point of view, how can you make that accessible to customers so that people can trade off of that? And I think that's, it's been an incredible evolution, but it's still the same fundamental principles are kind of driving the business now. So we can talk a little bit about like where we go now, where we're now next, but I think it's now an evolution from what I call traditional media, traditional data, to alternative data and new content that's produced by individuals or other people who are not in the traditional media.
Yeah, I think we're going to touch upon that a bit later on. But I mean, first of all, one question. If you were at 4 a.m. picking up those newspapers, when did you sleep? I mean, when did you go to bed? At 8
bed
p.m.?
Like at 8 o'clock, 8 p.m. Yeah, it was a sad life. But I'd go to bed at 8 p.m., get up, and we'd start working at 4.
Oh, that was very interesting and exciting. But I really want to come back to Bloomberg as the tool it is today. I'm guessing that a lot of the listeners are working in probably startups or financial apps or fintechs that do some of the things that Bloomberg does today, maybe a fraction of it. And every now and then we hear about this company that is going to replace Bloomberg, the new Bloomberg, but cheaper and faster and so on. And I guess my question for you is, how has Bloomberg over the years managed to maintain this dominance, and how did Bloomberg remain unchallenged despite all these predictions of downfalls and all these new fintechs coming out?
It's a big question. So first of all, Mike Bloomberg is a genius, and he's got an incredible sense for the product. He has also built a culture of very hardworking, very customer-focused, very incremental improvement. So, I mean, why Bloomberg has succeeded, I think, has a lot to do with just the culture of orientating people around a very clear mission of saying, what information do financial professionals need, and what do we have to do to get there, and just coming at it day by day. So I think it's like Bloomberg's like any great company, Google, Microsoft, others, where people have a pretty clear mission of what they need to solve, and they're working at it. So I think that the part where people think Bloomberg can be replaced, the part they don't understand is how it's such an essential element in the ecosystem of finance. And there's some things about the financial markets that make it quite unlike other industries. And I think people particularly think about it from a tech point of view, and they say, why can't we just create better tech and displace Bloomberg? And I think there's a series of things there. Number one, they underestimate that finance is a very regulated business. So, for example, all the Bloomberg data is kept for compliance measures and stored in case there's any issue with regulators. So there's a whole series of things that are behind the scenes that you don't even know about that application, but that's a key service that the company provides. Once a client, buys Bloomberg, the switching cost is very high because it's essentially doing all your compliance as well as your front end kind of applications and so forth. So that's an aspect I think that's hard to understand. The other is that Bloomberg understands its customers very well, and they are geared for speed and reliability. You look at, most consumer tech can do incredible things, but it can also go down for hours. Like Bloomberg has no outages. It's like that's impossible for them to maintain business if they have an outage. So very reliable. And then it's geared for speed. I mean, and a lot of people don't really focus on this unless you're professional, but when you call up a website, it can take 3 seconds to paint. In Bloomberg, it paints in, less than 30 milliseconds. So everything's very fast, very reliable. And so these are, when you're trading billions of dollars of securities, those are the things you are mostly looking for, as opposed to some kind of bell and whistle that is like a fancy page or like a great design. You're looking for speed and reliability. So they provide that. And then I think, they've just done a great job over time going into new markets. And starting with bonds, they go deep in bonds. Then they went into equities, then commodities, then fixed income, then FX. And so just they kind of aggregate all this information, make sure it's very reliable and clear and so forth. So I think those are some of the reasons why people don't understand why it would be displaced. It's not like a search engine. It's a search engine is how you might you might get attached to Google, but you could use Bing. That would be possible. And it wouldn't be that different. I mean, this is totally different. You're embedded in the customer's daily workflow and business in a much, much deeper way.
Yeah, 100%. Like as a fixed income advisor, if I had to emphasize two things about Bloomberg, one is that the market is on Bloomberg. I mean, it sounds stupid, but there's this feature, which is the chats.
Yeah.
And the whole market, all my counterparties, all my sales reps, everyone is in there sharing information, access, prices, and so on. And everyone is there, so you need to be there in order to get that information. Yeah. It sounds a bit stupid, but it's actually a big deal for us.
I think the message function is a good thing for people who don't know what we're talking about. It's essentially a communications. It's like a chat feature or an email or a chat feature built into
like a chat. Yeah, internal chat.
What's important to note about that, though, is that a couple of good things. First of all, I know the engineer who originally built and designed that. And good story is that he built it as an internal tool to communicate with other engineers in the company. And this is in the early 90s, like 92, 93. And then he thought this would be great for customers. Customers could use this kind of an email service, a point-to-point person. At that point, they were using bulletin boards where like there'd be 100 people in the room and people would post just randomly. You couldn't follow a conversation. So he took it to Mike Bloomberg and suggested they build this. And Mike was skeptical. He was like, "What?" He's like, "I don't see how people would use that." And the engineer pressed and said, "No, this is going to be really good." And so Mike said, "Okay, if you really believe in it, let's build it." So I think one of the things that story tells me is that, there's not like a magic product plan. And what Bloomberg is good at is iterating, and Mike is open-minded. He didn't initially see that value immediately, but it became clear very quickly with the usage. So he's open to products like that. But then to your point, that message system became kind of a gated community. So if you are in finance, you could look up anyone else in finance and you could connect with them directly. And there was no intermediator. You weren't calling an operator. And, back in that day, you didn't have their email. Email didn't exist, but you didn't have their phone number. And yet I could connect with you. I could find you in this directory and I could connect with you directly and I could sell you securities.
There's no guarantee of an answer, right? But I
can
definitely
guarantee of an anscer.
Send a message to Mohammed Elarian, like, "Hey, Mohammed, how's it going?" And maybe he answers,
He might answer. But then I think the thing over time, it became a situation where because the product is expensive and everyone's a professional, if you're inside this gated community, it was a level of trust. And if you were outside, it became harder to connect with people and to communicate with people. So the email and chat functions are really, really huge in terms of cementing the product as a community. And that would be a reason why you'd want to have it for sure, because you could look up people, you could communicate with them. It was invaluable.
The other feature that you alluded to that I'm 100% a fan of is the speed. Because when you open Bloomberg the first time, like everyone tells you about Bloomberg and you're like, what is this? It looks like a Mario Bros version of the game from the 1980s, like all pixelated. Like the UI is like shocking. It's so basic. You're like, what is this? Yeah. But then when you start using it, you realize, they did it all. Actually, it's very intentional, I guess, the design, so that you really focus on the information and not the look and feel. And also, I guess that has the advantage of making the tool super fast. Like when I'm in front of my Bloomberg, I can be doing a presentation or having a client call and receive random questions. And once you start using it, obviously, all the shortcuts for all the different functions, and I can get the information instantly, which in practice, what this means is that it kind of gives you superpowers, because it feels like you almost know everything just because you can keep talking. And whilst you're talking, you can open the window and keep talking without pausing, like for anything to load, right? Like you can be talking about US treasuries and blah, blah, blah. Oh, and by the way, the market is pricing this amount of rate cuts at the moment. Right. Oh, by the way, and the spreads are over here. And you're just jumping from one function to another without any latency. And that's just fantastic. It's really, really powerful.
You must be a good salesman in that way, to use it that way, because I think that is right, where you're looking up information while you're talking. But it's, two good stories about that, though. The color scheme on Bloomberg is iconic. It's amber on black. But remember, they built this in 1983. And the two choices at that point for computers were a green on black, or amber on black. They didn't have the sort of black writing on white screens that is so common today. So they went with what they had. And then over time, people got used to the imagery and it became defining. And one of the things I think people realized was that so I guess they went with that design because they had to. And that's what was available at the time. It was expedient. But they kept it because it became iconic. And when you would walk down a trading floor, you could see a Bloomberg terminal from a mile away because of the color scheme. It was very unusual. But ironically, over time, the other providers in the market have basically adopted that same kind of amber on black imagery. And it's become the standard for financial markets. So black, dark mode has become standard in finance in a way that it's not in consumer. And when Mike came back from being mayor in like 2014, we took a look at and we evaluated whether we should switch the color scheme to, black letters on white. Like we basically were considering a total redesign. And we went out to customers and asked them. They said there was a kind of a split decision. And Mike said we should just stick with what we have. People know what it looks like. But it's interesting. We even considered changing it. And I think that the color scheme is iconic. But I think the speed is the issue you talked about. And so in the design for applications, when you design something there, you think about how fast that will load on the screen. And where a consumer app would put up lots of pictures and things that entice you to make you want to go to the page, those things take time to load. They take milliseconds or seconds. And so at Bloomberg, it was very utilitarian. You'd strip all that out because you wanted to load the page fast because people wanted the pure information. So I think this is driven in part by, certainly by the customer, but it's by listening to the customer too. What does the customer want? They want performance. They want speed more than they want something very designed or attractive or so forth.
Yeah, 100%. I mean, speed is the key here. So one of the reasons also why everyone in the industry is so keen or such a big fan of the terminal is because the accessibility to data. And I wanted to ask you about that. How has data accessibility over the last 30 years evolved, especially now in the time where Gen AI is basically reshaping the whole landscape? Hey there, quick favor to ask. If you enjoy the blunt dollar, the unfiltered takes, the stories, and the laughs, the easiest way to support the show is by tapping that subscribe button right now while you're listening. And here's my promise. If you do, I'll keep bringing you honest conversations, fresh perspectives, and the kind of finance talk that's engaging, insightful, and worth your time. Thanks so much for being here, and let's keep these great finance conversations going.
It's so I think about data, and I'll tell you a story as an example. I think broadly, we always have the same arc of how data is acquired, being processed, and it reoccurs in markets over and over again. When I started at Bloomberg, the first reporting job I had was covering emerging markets. And at the time, it was a very nascent market. So this is like 1992, 91, 92. And people traded the securities by voice trade, over the phone or by broker screen. But there were no feeds. And so I had no access to prices. I would call people to write about the market, and I would say, well, what happened today? And I couldn't see anything. So it was different than the equities. Imagine everybody today goes on Yahoo Finance and they can sort of see prices and they can chart things. Imagine you have no ability to do that. So what I did was I called a chemical bank and I asked them if they would fax me a list of the prices every day, which they did. And so they faxed them to me and I typed them into like a Word document and I published that. And I think it's interesting when you think about that. So bringing price transparency to anything, any market, the first thing you do is you just get the prices and you publish them. I mean, it might start out as a once a day kind of flat screen. And then we take those prices and we put them into a time series so you can chart it. Even if it's only once a day, you can chart it over time. And that's kind of the beginning of this movement towards, okay, how do you have a direct feed and you enter in a number of bids and offers and different prices and you combine them into a compiled one price, and then that becomes a real-time screen where you can look up the price and you can see a chart. Now we have that in like lots of, even in alternative collectibles and things like that. You can look up the prices of trading cards and Maseratis and various things, But it's always like that. I think people decide they want to trade an asset. First, they have to get the prices, then they have to input them. And then over time, they're like, oh, this is popular, so we're going to create a feed. But when we first started, none of that was there. And so I think it was a really interesting also, when you think about it from a news media story coverage, I can remember reporters at Bloomberg started to write stories about the stock market and said, what happened? Right. And that had been going on for obviously decades. Newspaper reporters would always say the stock market's up or down. But one of the interesting things is that until Bloomberg built this application that was accessible to the reporters as well as customers that calculated the weights of what was driving the index, you didn't really know. So you might say the Dow Jones Industrial Average went up or the S&P went up because you knew what the number was for the index, but you didn't know what the component weights were that drove that number. If you see what I'm saying, like the breakdown. So Bloomberg built an application and the reporters knew that it was really driven by Intel or it was really driven by IBM. And so the stories became much more nuanced. And that's now a very common feature. But back in the day, that wasn't available at all, So I think prices, you get prices, you start to chart them, and then they become also more available for analytics and other deeper inquiries.
By the way, you were talking about the fax. I think a lot of listeners wouldn't know what a fax is. Can you explain them? I think one of the latest generations that saw one of those at home.
I think you have to tell people what a fax is, but it's a fact, that's crazy.
It's like a scanner linked to the phone, but old days. So you would put a piece of paper at home, and on the other side at someone's home, the machine would start beeping and you would press the button. It would make a terrible noise and the paper would start coming out on the other side. But yeah, that doesn't exist anymore, right? Like I don't see any of those anymore. Faxes
exist in a digital format, I guess you could say. But obviously it's just email now. It's, that's how companies released information back in the day too, right? Is they would fax you their results.
Oh my God. Yeah. Like I love these stories because it really shows.
I mean, it's really crazy when you think about it, but it's not that long ago, but it's, they would have a piece of paper they typed up that said, here's what our results are. They'd have your fax number, they'd put it in. And so if on the Bloomberg end in the newsroom, you'd sit there and the machine would whirl and make noises, and then a piece of paper would slide out and you'd pick it up and it'd be like, okay, there's IBM earnings, or whatever the announcement was. And then someone would get on it,
It's very funny. Talking about stories of how things were in the past, there is this story that you and I talked about in the past that I love, which is the Y2K period, which was basically when, we went into year 2000. People thought that systems would collapse and that it would be the end of the world. You were Bloomberg's New York bureau chief at the time. And I'd love to hear, like, how did you live through those moments? Because I guess it was very particular, very stressful.
Yeah.
And what do you think that event represents in terms of global interconnectivity and technological transformation?
Yeah, my thoughts on that, for people who don't remember what Y2K was, when the new year struck into the year 2000, a lot of computers were configured where they only had 2 digits for the year, like 99 for 1999 or 98 or 89 for 1998. And people thought the computer systems would fail and it would be a catastrophe and all these things would happen. So it's amazing in hindsight, but so many people did so much work to try to make sure that didn't happen. And because of the fear it was going to happen, myself and another person I worked with, Brian Rooney, stayed in the office in New York, and Bloomberg had people in all offices all over the world to sort of monitor to make sure it went okay. And obviously it went off fine. And so the main result was I missed my New Year's, the biggest New Year's, like decades. But I think what we realized afterwards, one of the things in my thought was that we realized that the world was much more globally interconnected than we had realized. We thought things were very siloed. In the 90s, you would build a product or you'd have an application and it was like here. And so we were probably like almost 10 years into the internet then. And we realized just how interconnected everything was. And that's what Y2K caught me. And I think the world, in a certain way, our perception of interconnectivity and globalness changed at that point, where we really understood both, not just technology systems, but also markets were much more intertwined. I think that's definitely one of the things I look at from before and after that period, that everything was interconnected. Information was. When you think about that, I can remember like in the 90s, people talked about equities and fixed income and commodities as being relatively uncorrelated. They had different markets and you would put assets in different places for diversification and so forth. In the years subsequent, and particularly when we got to the global financial crisis in 2008, one of the things we saw was very clear that everything was connected. As an example, in the market I originally covered in emerging markets, people thought you could buy emerging markets as a diversification and yield play. But it turned out that when the US market went down, people had to sell something, they'd sell emerging markets. So everything in a crisis, kind of everything becomes correlated very fast. And that's continued to be the case in the last 20 years. I mean, every major downturn, everything's suddenly correlated. We saw that even with crypto recently, right? So I think to me, it was like really, that was the lesson of Y2K for me. It was just like how everything is connected and tied together.
Everyone on the same boat. I guess I'm part of the generation. I started working full-time in 2012 that started in an industry that was already completely interconnected, but it must have been very interesting to see during the end of the 90s, beginning of the 2000s, that transition take place and people realizing that, we are all on the same boat and we all face the same problems across the globe.
Yeah. No, I can't even imagine the situation you're in terms of coming in 2012, because you've basically only seen a bull market. You've only seen low interest rates until very recently, and an incredibly strong equity market. So I don't know how you think about that, but that's got to be very different,
Well, we could do a whole podcast episode about that, especially when it comes to fixed income, because interest rates, indeed went down from the 80s all the way to 2020, more or less. We had like a bull market for 4 decades, and I was just getting into the market at the end of it, and since then it's been a little bit more choppy. But yeah, like there is indeed like a whole generation of young, I would say, finance professionals that haven't seen the volatility bouts that you guys saw in the past. Maybe leaving aside, of course, a few episodes in recent years, such as COVID. But yeah, it's a different world. Maybe we can have a whole different episode on that. Talking about the 90s, I also wanted to ask you, because I know that back at the time you were manually processing emerging market debt prices for Bloomberg. Obviously, debt is very close to my heart because when I started working as a fixed income advisor, I started specializing in debt. So it's a topic that I really, really like. And I guess that, if now sometimes getting info is hard, back at the time in the 90s, getting high quality data or even any data at all on EN debt must have been quite a challenge, which highlights many, many things, but mostly not only how hard it is to collect this data, but how important it is to have precise and quality financial reporting. So what thoughts can you share from the states of affairs today from where we were back at the time?
So I think the big idea is we've gone from scarcity to abundance. The scarcity, when Bloomberg started covering Argentina, for example, there was a guy, Rick Jarvie, who we put in an office in Buenos Aires, and we located the office across the street from the stock exchange. And the reason we did that was because at the end of each day, the exchange folks would come out with pieces of paper with news on it. And he had to run across the street and take the piece of paper news and run back across the street and then type in headlines and type out stories. So it's almost the equivalent when you talk about high frequency trading of locating the trade close to the exchange, or that processing close to the exchange. But that was the world we lived in. We lived in a world where the person had to be very close to the exchange. He had to walk over and manually get the information and then send it out to the world. And we thought that was like incredibly global because it was going out to the whole world. And whereas before it was would have been local. But the impact of that system was that there's very little information. We didn't have much information about companies. A lot of the companies at that point in emerging markets, their descriptions and fundamentals were not online. So you would have, I can remember when I first started covering Mexico, I had a handbook, the Mexico company handbook. And it would have all the financials for the companies, year on year. And that's where you would get your sort of revenue figures and things like that. So fast forward to today, and obviously because of the internet, digital, all that information is now online. And on top of the news, which the Bloombergs and Reuters of the world, there are now lots of other people publishing information, just some of them random people, some of them financial professionals. But so the volume of information has gone up. And just to give you a flavor of that, when I started the product role at Bloomberg in 2005, let's say 2005, Bloomberg was carrying maybe 5,000 stories a day from Bloomberg. And then, half a dozen years later, they were covering 2 stories. And those other stories were coming from content on the internet, scraped content deals, and so forth. So I think in the last 20 years, the information challenge has gone from one being of total scarcity, like you can't get anything, to overabundance, where you have so much that you need processes and systems to winnow it down and find what you're looking for. And this plays out in so many ways. I mean, in ways again, in the 90s, just to give you an example, it was very hard to get executive CEOs on the phone. Oftentimes CEOs did not do conference calls. They didn't do the earnings calls. So there was just I would say kind of a scarcity of information in that arena. Now, every CEO is on every conference call. You have all sorts of other people publishing substocks and blogs and things. And so the problem now is that there's so many insightful things out there. I can't find them all. I don't have time to read them all. And we haven't really built the systems, let's say, to aggregate, sort, and derive insight from all that information that's out there. So I think the key thing from a technology point of view that's going on right now is building systems that allow people to better sort that data. And, Bloomberg's doing that, but this is where a lot of startups come into play now, where a lot of startups around that ecosystem are providing value by adding additional components and layers where you can get insights that were embedded in data that you couldn't get otherwise. So I think we're actually getting in a really exciting time period, but it's a period the problem is no longer getting information, it's processing it and understanding it and knowing what you have, for sure.
Yeah, I fully agree with that. We've discussed in other episodes about the fact that We come from a world where information was barely accessible to a world where there's too much of it. And the challenge is how to digest it. But in terms of production, I think we're entering into a world of niches where, yeah, everyone can be a reporter, everyone has something to say. And I feel that if you know where to look at, there's tons of very interesting and insightful pieces of information out there that are not necessarily being produced by the main media outlets, but that help a lot when it comes to investing. And it takes a little bit of time to sort that out, but there is value. Obviously, I mean, the main example that comes to mind is social media. So I wanted maybe to ask you about that. How, with the rise of creators on Twitter and all the Substacks and even LinkedIn, how does the rise of expert corporate influencers, be it in the finance industry or even like any industry, I would argue, how is that reshaping the role of media?
Wow, there's a lot of questions embedded in there. So first of all, if you look over the last 2 decades, and I think for the foreseeable future, what we call the media, let's say the media calls itself, which would be a Bloomberg, New York Times, Reuters, BBC, and so forth. The established media has been shrinking for reasons everybody knows and talks about with advertising and so forth. It's been shrinking in size. It has fewer reporters. They're covering fewer things. It's also been shrinking in accessibility because to the degree they have survived, like take the New York Times as an example, they have gone behind a paywall and they're now charging. So the period where they reached vast numbers of people on the internet because the stories were free and advertising driven is over, and you now have to pay to see them. So that they're incredibly influential. They do great work, but their reach has really gotten smaller. So if you're looking at this from the financial markets point of view, or from your point of view, like you're saying, where do I get quality information to trade off of? And so the mainstream media it's getting smaller and it provides less information and less access. The gap has been filled by these all sorts of user-generated content as well as niche publications. So think of it like we now live in kind of a newsletter world where there's a lot of specialty newsletters that publish niche, the long tail of information. And then there's a lot of user-generated people. They have Substacks, they have LinkedIn, they publish on Twitter. And those people are really interesting to me. And I think this is a fundamental shift because a lot of the people who are now publishing about finance and about markets are not traditional journalists. You think your traditional journalist is somebody who's a very good communicator. They write about all kinds of things and they have reasonable knowledge about it, an industry, because they've been writing about it. But the new people writing are a completely different breed. Because these people typically are true experts, true domain experts, very deep. You'll have a CFO writing about finance. And it just so happens that among all the CFOs, like this guy is really good communicator too. But the level of expertise that person has versus a journalist cannot be compared. So we're actually coming into this new world that's very interesting where some of the best information is no longer coming from the media. And it's coming from these other publications, which you might call an influencer. Although I think what's going to happen in business and in particular in finance is the influencers are not going to be these kind of like generalists the way you would have in like consumer or like Hollywood or consumer products, but they're going to be like true experts. And that's really fascinating to me. So like, in this example, you have lots of influencers in the consumer space in cosmetics, but they're not experts in cosmetics. They're just they use them a lot. They're good, they're good consumers. But you have somebody like Josh Brown who blogs, and Josh Brown runs a firm called Ritholtz Wealth Management. And he knows everything about the markets, and then he's writing and he writes really well too. So that kind of explosion of content is very interesting to me because I think they're going to, just people are kind of gravitating to that for a lot of reasons. There's just more expertise and there's more of it. And so I think that's going to be interesting. And I think that when you look on Twitter now, or to a lesser degree, LinkedIn, the people writing in fintech and finance, some of them are incredible. And you have to discover them. You have to find them and follow them. And it's laborious and it's not like super set up well, but the payoff is pretty great. So I think we're just at the beginning of actually a golden era of like a lot more content. people talk about the decline of the media, but I actually think we're at this golden era of content where there's going to be a lot more produced, and that's going to be very, very interesting.
I'm curious to see also how the traditional media outlets react. I mean, we mentioned it at the beginning of the podcast, but you helped out in the efforts to integrate Twitter within Bloomberg, didn't you?
Yeah, I did. Yeah, I
And
did.
what was the logic behind that? Like Bloomberg said, okay, we acknowledge that there's a lot of value coming from there, and we want to facilitate our users that flow of information so that they stay within our ecosystem. Hey there, quick ad break. Do you work in the finance industry and have a genuinely interesting story to share? I'm always on the hunt for great guests who bring raw, unfiltered insights to the table. Or maybe you know someone with a story worth telling? Please put us in touch. You can reach out to me directly via LinkedIn. I'd love to hear from you. And now, back to the show.
So it's really interesting the way you frame that. It's not like that. It wasn't like that. It was customer driven. A lot of good innovation is customer driven rather than strategy driven. You can look back on it and explain it that way. But in fact, what happened was there was a major hedge fund in Europe, in London, and they had a problem because they're in roughly 2010, their traders were using Twitter on their phones. They knew Twitter was a source of information, and they'd hold up their phone and look for insights. And the firm felt that there was a risk that they could be tweeting. And so they called us in and they said, okay, you're our biggest vendor and supplier of information. Can you help us solve this problem? Well, what we're looking for is how do we get the insights from Twitter to trade on them without having the risk of people posting online? So what we did was we went to Twitter and eventually we bought a feed, we bought access to the fire hose. We assigned a lot of engineers to parse it and sort of tag it in a way that it could appear on the Bloomberg system and people would have access to a read-only version of Twitter on Bloomberg. And I think that was a super successful project, but it was driven by the fact that traders knew that there was insight and information in this. And so they just wanted it. And I think it also points to something else, which is most people in the financial markets are agnostic about where that information comes from and what it looks like. They want quality information that's market moving. And so it has taken the media a while to get their head around this, but at the time, the media was like, that's Twitter, that's not news, that doesn't make any sense. But a financial trader doesn't really care. They're not like, oh, I have to read news in a certain format. They just want the information. So I think they do look at the reputation and the reliability and so forth, but they weren't as hung up on the fact that it was a media company or not a media company. They're just like, this is quality information. It's been consistently right. So we want access to this.
Interesting. Okay.
And I think that you're going to see, just going to keep seeing more of that. I'm not sure. I think the media and the financial media do great work. They do great work. I think all the growth is coming outside that. All the growth is coming from content outside that area. And I'm not sure they really understand how to compete. Like an example would be, a big example actually is the explosion of podcasts are very interesting. I'm sure you watch some financial podcasts. 10 or 15 years ago, those would have all been done by media companies. You'd have a BBC podcast or a Bloomberg podcast or New York Times podcast. And you do have those. But the growth has come at the outside media companies. The growth has come with the sort of Joe Rogan or Patrick O'Shaughnessy and Stephen Bartlett. It's these independent people who do long form, very in depth. And so even in that arena, the financial media is not done particularly well,
Yeah, I mean, we are at the beginning of a new era, if you will. This is a prime example of it. I mean, a few years ago, I couldn't even have thought or dreamed about doing my own podcast. And here I am. I'm not talking directly about markets. It's a finance podcast, but not with a different angle, I guess. But yeah, like there's content, being created left and right by people that have knowledge and things to say, and I think it's a very welcome addition to the way we're consuming information nowadays. I'm all in for it, so I'm excited to see how that trend evolves over coming years. I guess like a lot of those things happen very gradually. You mentioned how Mike was an incrementalist, how he wants to progress 1% every day was his motto in some way. And you've seen Bloomberg expand over the years, over your 3 decades firsthand. I wonder if you could give us some color on how it was to navigate like the regulatory hurdles when it came to expand into new markets such as Japan, or even getting closer to politics and Washington, which was also quite big for you, if I understand.
Yeah, there's a couple of stories that stand out there, and I think they're both stories about media and information, but also technology, and maybe just the way the culture has shifted. I mean, I'll start by telling the Washington story. When Bloomberg started, the idea is we were going to write financial news. And so there's the first year they started with 15 people in New York City, and we covered markets basically. And then what became clear is we needed to cover companies. So the second year we hired company people, and we realized also that policy, like information out of Washington, also drove a fair amount of market activity. And the news out of Washington was both political, but it was also very concretely economical, like the Labor Department reports and the Commerce Department and so forth. And so it was quickly, determined we needed people there to write about those topics. So what happened was that when we tried to expand in Washington, we were told that you had to have credentials to either be a reporter at the White House or a reporter at the Labor Department or Commerce Department. You had to be like verified as a reporter. And initially, and that decision was made by this committee of journalists. So the government had appointed a journalist group to make the decision of who else is a journalist, and that those people would let them in. And initially at the time was, and this is hard to believe now, but Bloomberg didn't publish a newspaper. It was only online. So the initial determination was Bloomberg did not qualify as a news organization because they didn't actually publish anything. And now that seems insane, but that was a battle. It was a battle. And then my former boss, Matt Winkler, who's the editor-in-chief at the time of Bloomberg, went to bat and said, no, we are a legit news organization. We have to cover this and we need to be in here. And, but it took a little bit of time in persuading. And Bloomberg went through a similar, but even more difficult battle in Japan. Japan at the time was, had a very strong group of journalists and media companies. And they sort of had a pecking order of who got the information first and where they got it and so forth and what access you got to it. And if you weren't part of the club, and it was literally called the Keisha Club, if you weren't part of the club, then you didn't get access to the information you needed to do your job. So there was this whole battle of like how we were going to get into both be accepted in the clubs and get access to the information on an equal basis. And I think, at some degrees, this is kind of a broader story, but like access to information has been democratized in a lot of ways, and access has been open. And I think these were early examples in the early 90s where it was still very much industry driven and industry focused, and you just weren't let in if you were new or an outsider. So I think it's kind of fascinating to think about how much that's changed.
Wow. Yeah, I love those insights. And it's crazy to, as you were saying, how much things have changed and more importantly, how things are likely to change. So maybe we can now talk about the future and going back now to this new step in your career.
Yeah.
Where you've transitioned from Bloomberg to running 2 companies, one focused on storytelling and the other on AI. What's the future of media and finance with everything happening on the AI space, and which role does storytelling have in all of that?
Wow. I mean, I think it's bigger than ever. I mean, so my career, I think, has been an evolution of the way information, in particular financial information, is created and displayed and accessed. And after I left Bloomberg, I started a company called Principles Media, which does ghostwriting for executives. But the big idea there is that people have realized that with the access to the internet and the distribution that platforms like LinkedIn, Twitter, others provide, that you can write your own story and you can reach the stakeholders or investors or employees that you want to reach. And what we saw until, really quite recently, 15 years ago, even 10 years ago, was that largely you still relied on the gatekeeper. The gatekeeper mainly being the journalist and the institution like the New York Times, where you had to get your story there to get visible. And so we're in a completely new era where I can go out and write online and get 100,000 views and get my story out there. I mean, this is like unprecedented. And you still have relatively few people doing it. Okay. And I think the reason for that is somewhat generational. People who are, over 50 grew up in a different era where they weren't as digitally focused. The whole ethos was not to go out and write about what you've done. It was more to sort of focus on the team and the company and so forth. But the seminal event for me in this arena was, I guess now is it 2 years ago, 1 year ago, when Sam Altman was fired from OpenAI. He was fired by the board. And when you're fired, normally you're cut off from all communications. You have no access to the PR team. You're kind of done. But like 45 minutes after he was fired, Sam Altman tweeted and said, hey, basically I've been fired and I'm going to have more to say about this. And he has 2 million followers at the time on Twitter. So he had built up this enormous following by publishing content for 2 decades. And he was there for independent. He was able to communicate with the marketplace and with people independent of the institutional power structure. And I think when you saw that, you had to tell you the lesson was very, very clear that anybody who doesn't have that capability is at a disadvantage. They're at a disadvantage just as an individual in our modern society, but they're also at a disadvantage in promoting their company. So you fast forward to this year, and the big event that happened for me was the way Mark Zuckerberg started using social media. So Mark Zuckerberg, kind of ironically, since he controls Instagram, had never really done much with reels or videos or so forth. And this past year, he got very, very active. And in fact, I think the major product announcements, the major shifts in policy were all announced with him talking directly into an iPhone and publishing that. And that's the way the rest of us communicate. So I think that CEO-led communication, whether it's video or writing or tweeting or posting on LinkedIn, is going to be a very big thing. And relatively few people do it now, but it is an unquestionable advantage to have a large number of followers and to be able to do that well, to communicate well. So that's what my agency does. It helps people tell their stories, and you can now tell them independent of the media. And I think that's the kind of revolution people haven't quite absorbed the implication of, which is you don't, because our whole lives, we've always thought, if I have a story, how do I get the newspaper to write it? And now we're realizing that if you just tell a really good story and you have the distribution, you can still do that without the gatekeeper. The other company I have is called Pricing Culture. And that's kind of the other end of the barbell. If my agency is high quality, low volume, handwritten stories, the other company is high volume, machine written content. And it's for totally different purpose. And it's really pretty fascinating. It's something which has only been possible since the advent of generative AI and AI in general, which allows you to take information and turn it into a narrative. And the big insight we had here was that when you run the big insight is that there's a lot of insight locked inside numbers and that kind of data that we can use AI to write narrative stories about. And then that becomes more accessible to people. Like an example of that would be if I handed you an Excel of a lot of numbers and it was an area you were not familiar with. It was some kind of biotech testing, and it's just an Excel of all these numbers. You wouldn't know what to do. You'd have to basically hire a specialist in that data to interpret the data and produce a report on it. But we realized with the right prompts and the right domain expertise, we can write a narrative report based on that data that just gets pushed to you every day, every week, every month. And it's accessible then. The accessibility is in the context in which text allows us to deliver around the numbers. And anyone in your company could read it then. And so it's going to highlight anomalies and changes and things you should be looking at. And so that's a human use. And then a machine uses, we can write that story and we can store it in a database and create opportunities for small language models where you can query that database and get insights in a way that you cannot query the numbers, because LLMs basically work off text, not off data. So that's kind of two ends of the spectrum. And I mean, I couldn't be more excited about both of those because they're really, like, I think there's a lot of runway and it's super interesting.
Two ends of the spectrum, but with a common theme, which is storytelling. And fun fact, one of my year-end resolutions for 2025 was to get better at storytelling, because I feel it is the one thing, as you were alluding to, that a lot of people are not getting right, but that is incredibly powerful. So I have two last questions for you. Now we're going to step a little bit back, because a lot of our audience is our young listeners, probably, think about starting their careers in finance or holding junior roles at the moment. So I have two questions that are going to be specifically useful for them. One is, you are a charter holder, and I was wondering if you could share with us whether being a charter holder has helped you in your career, in all honesty, because it's a lot of work, and whether it's worth the effort or not.
That's such a funny question. I mean, I think the CFA has evolved into a marker for anyone in finance. It's kind of like you have to have it. If you're going to be an analyst, a portfolio manager in the modern world, I mean, I think you basically have to do it. And firms look at it like, it's almost like they've outsourced some of their training and testing to the CFA. And if you pass that, then you're like, okay, it's like a demonstration of a certain amount of mental horsepower. I mean, obviously the market's changed so much. I don't think it's a demonstration of like what you really know, because I mean, I took it 20 years ago, and that test is going to be vastly different than it is today. And I couldn't just walk in and pass the test today without an immense amount of preparation. So I think it's more a demonstration of your commitment, your effort, and the fact that you can like learn and do this stuff. Honestly, I think for financial people, it's basically, you have to have it. I was not, remember, I worked at Bloomberg. I was in the media. I didn't have to have it. I was one of the few people I felt in the room that day who was not working at a bank or a brokerage house. I did it for a totally different reason. I did it because as I talked to people in the marketplaces, I wanted to better understand what they were thinking and telling me. And I mean, honestly, just one basic reason was people would always tell me what the stock is going to trade at a year out or 2 years out. And they said, well, the model shows it's going to trade at, this price a year out. And I was like, I had no idea how they got to that number. It was like wizardry. It was like magic. And I mean, I think one of the things you learn when you do the CFA, if you haven't done financial analysis, is that it's not magic. It's just like a series of inputs and a series of decisions. And that helped me understand better the people I was interviewing and talking to. Like, it definitely changed the way I look at the whole industry. For me, it was very helpful. I'd do it again. But I think most people, if you want to be in finance, you don't really have a choice. Just, you're going to have to do it.
Yeah, I mean, I guess it depends on the role, but for sure it shows that you are determined, that you have grit and mental toughness. And by all means, it's a great way to learn about financial markets. Not for everyone, given the time commitment, but whenever anyone asks me, I always say, listen, if you want to understand how financial markets work and you're willing to put the work, I think it's definitely worth it. One last question for you, a bit more philosophical, but I like to ask this to my guests. Obviously, very long and successful career in finance, Ted. I wanted to ask you, what is one lesson that you've learned along all these years from working in the industry that you wish you had learned earlier?
Well, I think the biggest lesson, and I'm not sure this is unique to finance, this could be just overall kind of general career advice, but it might more apply to finance, and that's about networking, meeting people, and getting out there. And I'll tell you, I think finance is somewhat unique in that people tend to move around a lot within the work, a few years at this bank and a few years at this bank and a few years at this bank. That doesn't necessarily happen to the same degree in other industries because you don't have as many players and so forth. I mean, maybe it happens a little bit in tech, but so your ability to connect with people and to just know people is really, really important, I think. And it's not going to just happen to you. So I have found, subsequent to my leaving Bloomberg, if I look back, I mean, I spent a lot of years knowing a lot of people at Bloomberg. I was very internally focused on the connections at the company. And so if there's one lesson I'd say to people, and one thing I learned was that was somewhat of a mistake, over prioritized internal networking and I would have prioritized more external. Like, do I know people at the other publications? Do I know people? How many people do I know on the street and so forth? And how much time have I spent on that? And that's been a bigger focus of mine since I've left, is just connecting with people, meeting people. Not only is it your network, if you want to look for a job or you want to, but it's also your awareness, your situational awareness is much higher because you're aware of what other people are doing in other industries. And I think that there's an easy tendency to get stuck into the company you work at or the job you have, and you're not really aware of what's going on. So I guess I'd say lastly is that the advantage you have now with social media to be able to do that is much greater than it was. It was much harder before. So with social media, you can connect with a lot of people. You can see what people are doing. People generally are pretty open. So I would go for that. That's something I would definitely have changed about my career. I would have known more people. I would have been more connected and more aware of the landscape.
And people are generally very nice and open when you reach out. I mean, look at us having this conversation. When I first reached out to you, I mean, we had no friends in common, just, a common interest for markets and finance. And here we are doing an episode together.
There you go. It's an exact example of that, for sure.
Yeah. Ted, it's been absolutely amazing to have you on the show. Thank you so much for sharing all those stories. I'm 100% sure a lot of our listeners are going to love them. I mean, especially those that got in the industry in the last couple of decades, I would say. We didn't have all that granularity, all that color. And I don't know about them, but for me, for sure, I'm a sucker for all of these stories. I love them. And thank you so much for sharing them. Best of luck for the next stage in your career. And I hope, in the next 30 years of your career, you manage to bring those businesses to similar heights to what you managed to do at Bloomberg.
Thank you for having me. I really enjoyed it.
The Blunt Dollar is written, produced, hosted, and edited by me, Ignacio Ramirez. Everything you hear, concept, script, sound design, and production comes straight from my desk, and occasionally my kitchen table. Thank you so much for listening, and join me in the next episode of The Blunt Dollar for more raw, honest finance conversations.